Good day, ladies and gentlemen, and welcome to the show on this Friday. Friday, August 4th, 2023. Thank you for tuning in. I'm glad to have you guys here. Now, first thing I want to talk about this morning is two U.S. Navy sailors were arrested and accused of spying for China. It says a year-long scheme alleged in an Espionage Act charges. So they're going to hold them accountable, evidently. But, I think this is the tip of the iceberg. These guys, these two sailors, are down low on the totem pole. And so they will get probably prosecuted to the full extent of everything. But what's going on the top of the totem pole up there? How much of the same stuff is going on out there? Just asking the question. But they won't get prosecuted. But how much of it's going on out there other than just, this is the tip? Why I say I think this might be the tip of the iceberg for this kind of stuff. Ukrainian official says drones hit naval ship amid increased attacks inside Russia. So we know they've been attacking Moscow several times now. Now they're attacking a naval ship attacks inside Russia. And it says Ukrainian sea drones attacked a major Russian port on the Black Sea on Friday, damaging a naval ship, according to the Ukrainian official. The latest in a series of strikes inside Russia, as Kiev vowed to bring the fight home to them. More stuff that's going on is, now the Wagner group is right on the border, just inside Belarus. And they're trying, this is destabilizing the region. And Poland is pulling all kinds of, what it is this small little territory, a land, Kaliningrad and stuff up in there. This is a hot region right there that the whole thing could just blow out of proportion. And we got to keep our eye on this region. There's already been claims made of incursions across the border on both sides or whatever, I just don't know exactly what's going on, but I do see the armies moving in, one side and the other side, right to that small little region right in there. It says Poland says Wagner Group will destabilize NATO's eastern flank, accusing the Kremlin of hybrid attacks. Fighters from Russia's private Wagner mercenary force are being moved close to NATO's eastern flank to destabilize the military alliance, Poland's prime minister said on Thursday. We have to be aware that the number of these provocations will increase. We got to watch that. Now, here's a thing right here, and this is very important to know. 9 reasons why gold will soon replace treasuries as the ultimate store value asset. Could the U.S. treasuries actually lose their position as the number one safe haven asset and money start to move into precious metals? I'm talking about big money. But if they're going to want physical, they better hurry the heck up, because it's going to disappear pretty fast. But let's take a look here at the reasons they listed here. In their conclusions, observation number 1, it says the U.S. government can't repay its debt. Default is inevitable. Well, those are debt products. It just seems illogical to me, the fact that they would buy the debt market and prefer that over gold. U.S. debt. And it just seems weird to me is it's debt that they're buying. That's not an asset, that's a liability. And the liability of what? If it was a corporation, it would be defunct. It's 30 what to $32 trillion is their nominal debt, and then they got the unfunded liabilities. It puts it over $200 trillion that can never be paid. That's a corporation that's in the red. That's a bankrupt corporation. So you think that buying debt in a bankrupt corporation is actually more valuable than gold? Really? Says the U.S. government can't repay its debt. Default is inevitable. Observation number 2. It will not be an explicit default. I believe that's true too, because an explicit default is a case where they just throw up their hands and say, well, we can't pay this. You're going to have to take a haircut on all these bonds. We're defaulting on them. That's an explicit default. They're not going to do that. They're going to pay in worthless currency units. It says the debt will continue, and that's why it's not an explicit default, too. They're going to pay, but in worthless currency units. They're going to use inflation to get themselves out of this mess. And so gold's going to go up, and U.S. Treasury's purchasing power in real terms is going to go down. It says the debt will continue. This is number 3. The debt will continue to grow at an accelerating pace. Oh my gosh, will it ever? Especially when they're having to pay interest, higher interest rates on all the outstanding debt. It says foreigners are not buying as many treasuries. Well, what about when they start to sell? Which could be very soon. Number 5, the U.S. government cannot allow interest rates to rise much further. Oh my gosh, is that ever true? So far, all these things that they've said, up to 5, is very true. Number 6, the Federal Reserve is the only big buyer of treasuries stepping up, which means currency debasement. Yeah. Number 7, the U.S. government will finance repression to debase the currency in a controlled fashion. They will use financial repression. Well, they've been doing that since going back to 1914, and look at where it's got us. The dollar's lost 98% of its purchasing power already. It only got 2% left. And now a credit down rating? Lost one of the triple A's off of the dollar? Now it's only 2 A's to go. And then it's going to be like, what next? You know how they do it. They A, and then they go down to B and B plus and stuff. But the credit rating agencies. Anyway. Number 8. Number 8 says treasuries will no longer be the go-to store of value assets as people look for alternatives. I believe that's true. Number 9. Gold is the top store of value alternatives to treasuries. As demand for treasuries falls, demand for gold will soar. I think all this is true. And I think it's all going to happen pretty darn soon. And you know how big the treasury market is. So when that money pours out, it's big amounts of money. Big. We're talking big money here. And, you know, gold and silver, especially silver, is such a small market. This is why the Hunt brothers tried to corner the silver market years and years ago. You know, and why nobody does it now is they saw what happened to the Hunt brothers. And they don't want that to happen to them. But, you know, I mean, it's exposed there. A billionaire could try to corner the silver market. And probably be successful at it because it's such a small market. Moving on today, we're going to take a look at the price of silver and stuff. You know, silver today and see what it's doing. 23.63. It's up 7 cents so far today. It's running in the same pattern it ran in yesterday. It's a great time to think about purchasing silver right now, being as the price is really down. It could be the point right now where I've been talking about for a long time, that they drive the price down as low as they could. And this could be the point where they've driven it down to as low as they can possibly drive it to without silver mining production dropping off. And there's going to be an entry point there where all of a sudden a lot of the big money out there is going to make a shift. And they're going to scoop up all the physical. They're not going to want the paper. They know better. They know the difference. If you think these rich people get rich by not knowing stuff and being stupid, they're not stupid. If you know that you want physical, they're going to want physical. And there's been a problem for things, big money and stuff. And it's not a problem for the common guy on the street because he's buying a small amount of silver. It's no big deal. What would the average person buy? Like would weigh a pound or two. But now picture these ultra billionaires out there, these really big hedge funds and these really big money managers and stuff like that, and they're working with tens of billions of dollars. When they have to buy, if they're going to buy, like, say, $1 billion worth of silver, you know, tens of thousands and actually millions of ounces they're going to buy. Well, all of a sudden, if they want real physical, there's allocation problems. You get that kind of money, million ounces of silver, and what are you gonna do? It weighs tons. It weighs many. It filled truck after truck after truck full of the stuff, and it's heavy. And where do you store it? Because people will steal it. So you got to think about all these things. These are logistical problems that enter in where other things in the market they can buy with a click of a mouse, and they don't have to take allocation. They don't have to have a place to store it. They just click a mouse and they've bought it. And that's what they're used to. Like with treasuries, just click a mouse, you've bought it, that's it. One and done. But if they want real physical metal, all of a sudden they're hitting a problem that they don't normally have and they're not normally used to dealing with. And that's the problem of not only allocation, but then storage and safeguarding it. And, for a small amount of silver, that's not a big problem. But now think about when you're buying 50 tons of the stuff. 50 tons. You need a forklift to move each ton. A big forklift. And people will steal. You get the idea. I mean, this is not simple. But ultimately, when it comes right down to the financial system being all just debt instruments, ultimately, when that starts to collapse, they will solve that problem of allocation. They'll be forced into solving the problem of allocation. And they will. And they're going to buy it all up at a certain point. Allocation or not, they're going to buy all the physical up. And they can move with a click of a mouse. They can buy it all. Like your coin shop or whatever, they just click. And you go in there and the guy says, okay, all this. The guy says, well, you got all these monster bucks. I see them back there. What's those green boxes back there behind the door? He said, that's all been sold. When did it sell? Oh, 5 minutes ago. I got the call. It's all been sold. It's all allocated. Some rich guy that was it. They just come in and they bought it all. And every place that they could buy it. They get their people that work for them. My people. You ever heard them say, real rich people say, this is my people? I'm going to get my people to call your people my people. Well, they'll get my people on the phone to call every place that they can allocate it, and they'll allocate it all in one big fell swoop. Bing, bang, boom, gone. And that's going to happen sooner or later. Once all of a sudden this shift occurs, that's going to happen. I truly believe it's going to happen at a certain point. Okay, cryptocurrency today, 29,234 for Bitcoin. Ethereum's at 1844. And XRP is at 66 cents. Now, see this stuff here. It doesn't require allocation. It fits in with their new modern world where they can click a mouse and buy it all. But they're not buying in. This stuff is not. I don't think this stuff is going to be bought by them or wanted by them until all of the precious metals are gone. They're going to want the precious metals first, the real precious metals, physical precious metals first. It's going to go first. That's the chocolate cake at the party. Everybody's going to want it, you know. And the salad over there is what they're going to have to eat. This is the salad. They're going to have to eat that after the chocolate cake's all gone, as a consolation prize. This is the consolation prize. But there's so much money sitting on the sidelines that an awful lot of it might fall into this stuff after the precious metals are all scooped up. They've made so much money out there. Multi-billions, trillions, gazillions. Anyway, guys, let's take a look now at Dow Jones Industrial Average today, which is up 257 points at 35,473. Taking a look at crude oil, is at 82.46. Oh my gosh, look at it go up. It's heading toward $90. This is crushing. Crushing. Because everything, this is an oil-based economy. Oil prices get really high, you're going to see inflation. Because everything has got oil in it. They use oil in every manufacturing thing you could think of, and then they have to use oil to get it to where you are. It's all oil-based economy, and so oil price goes up, so does the cost of everything associated with oil. And oil price has been really on a roll. I mean, it wasn't very long ago I was doing my show on here, and it was under $70, or 70, around 70. And that's not long ago. And now it's 82 and going up and heading toward 90. Let's take a look at bonds and rates today. We see falling yields today. It's fell almost as far as it went up, but I mean, we're looking at 11.7 basis points on the 10-year at 4.07, and the 30 years at 4.21, and it's down 8.6 basis points. So what we're looking at is falling yields today. We're looking at 11 basis points on the 10-year and 8.6 basis points on the 30-year. So it's moved back some. Taking a look at U.S. dollar today is at 101.79. Come on, pop in the chart for me so I can see direction it's moving. Well, it looks like it's moving down today. It's fell 74 cents. So it's like a falling dollar today. Thank you guys for listening to my show. Like and subscribe, and we'll catch you guys in the next episode, and have a great afternoon. Bye-bye, guys.